Welcome to this edition of Fridays with Fintelekt. My guest today is Robin Lee, head of APAC at Napier.ai, which is a London-based RegTech at which he leads the Asian expansion for its AML products. Robin is based in Singapore and is a very, very well-known personality in the AML, CFT, and financial crime compliance space in the region, having spent a number of years working in this domain. And he also undertakes a number of community initiatives to keep the compliance folks together. So Robin, welcome to Fridays with Fintelekt.
Thank you for having me, and thank you for the kind words, Shirish. You're too kind, sir. You're too kind.
Not at all. So Robin, at the outset, could you speak about your personal journey in the world of AML, CFT, and FCC, and how the various career moves you had have shaped and impacted you to get you into the position you're in today and doing what you're doing today?
In terms of my personal journey, maybe I'll take it back to the beginning and start from there. We've shared this joke many a time, Shirish, but for those of you who aren't aware, my parents are actually from Malaysia, but I was born and raised in the UK. And so, the number of times people have come up to me and said, "Hey, Robin, you kind of look like Jet Li, but sound like Harry Potter." That's the reason why, ladies and gentlemen. And let me see. So I graduated from King's College London in mathematics, computer science, and management. My career actually started in Silicon Valley. So as soon as I finished university, I moved to the United States, and I started out as a developer. Okay, and I worked while I was in the Valley. I actually worked at two startups, which were very much aligned with this concept of compliance and regulations, et cetera, et cetera. So the first startup I worked for, we focused on enterprise software for the healthcare industry. And in particular, we put together the first electronic medical record that could be used on the cloud, and simultaneously transcription software. And so for those of you who aren't familiar with this area, a doctor will what's it called, dictate his or her medical report, and then the transcriptionist will take that dictation recording and type it up, and then that will form part of a medical record per se. And so I was one of the developers for this software, and my first spat with compliance was revolved around this concept, whereby several doctors were outsourcing the transcription side, still all on our same platform using our software, to a third-party company. And often case, this third-party organization would be in a different jurisdiction. And there were instances where the transcriptionist or the transcription company weren't happy with how much they were getting paid. And so as a way of threatening the doctors to attain that pay hike or that pay increment, they would threaten to publish those medical records that they have on the web and make them available to everyone. And so it was my first brush with compliance. The second company that I worked for, we used to do email archival, and I say email as opposed to communications because that's the only way we communicated back then. I don't know if this shows how old I am, where I send an email to Shirish, for example, that gets archived. We had the ability to stop emails. So if market and timing, for example, were within like 7 words of each other, then the email could get stopped. Someone could sit there and review that email and say, this one's okay to go, this one's not okay to go, et cetera, et cetera. And very much our customers then were financial institutions like trading houses and what have you that require this sort of software. So I started out as a developer within that 6-year period. And then from there, I moved on to the business side, and I realized very quickly that coding wasn't what I wanted to do for the rest of my life. And then after that, and then during this time, I did an MBA part-time, graduated from Santa Clara University, and then made the move to Wall Street, where for 4 years, I worked in the hedge fund industry as an analyst covering technology companies. Lots and lots of compliance exposure there, whether that be from I started using the communications archival software to we had a compliance officer in-house who would tell us what we can and what we couldn't do as analysts, and who we could talk to even. And then, of course, there was the whole financial crisis as well, right? Where we see the market up 1,000 points one day, down 1,000 points another day. And so a big part of that led me to really question whether I wanted to be in this industry anymore, whether I wanted to keep doing this, because it was so hectic at the time, and I certainly lost a lot of hours of sleep, and probably as a result, hours of my life as a result of that. And so what I did after was my sister was living in Singapore at the time. I really didn't know what I wanted to do, so I came over here and spent the first 6 months like sleeping on a couch and trading stocks at night to get by. And then after that, I decided I wanted to stay in Singapore, and so staying in Singapore was the priority, as opposed to what I wanted to do with my career. And it just so happened that I found this company called the International Compliance Association, joined them, really had some amazing opportunities from a digitization perspective. So we offered compliance learning, and you could do like a diploma in compliance, a diploma in AML. And what I really enjoyed about working there was I was given the opportunity to digitize that entire process. And so we would offer, we would hold exams, for example, right? We'd hire out a massive ballroom. Guys would have desks like this big. At the same time, we were giving out 5 ring binders, yay high. And I'd see people like with their ring binders sprawled out because it's open book exams. And I was just looking at this thinking, this is a terrible user experience. Let's see what we can do to change this. And it just so happens that at the beginning of my stint there, the iPad Mini was released. And I don't know if you remember, but when this came out, it was super cheap, Shirish, right? It was the cheapest iPad on the market.
Absolutely,
it was small,
absolutely.
so cool. People loved it, and they didn't care whether it was like an $8,000, $11,000 course. The fact that you get the latest iPad for free with the course was a big deal. So we did that, and I designed the whole interface with iTunes University, the digitization of the documents, etc., etc. And we just gave away a free iPad, and sales went up exponentially as a result of that. I then also had the opportunity to take the membership that ICA had and digitize that into an app. So I actually pulled in one of my guys from Silicon Valley, and we actually took my colleague's pregnancy test app interface and then pulled that across to like a really cool app which would be useful for compliance officers, whether that be telling you all the latest regulations, to an exclusive, if you have to go into the member section of the app, you're able to access all like your magazine articles, your training, etc., etc. Really, really cool stuff. And then I left ICA after 3 years, just to take the opportunity to start something myself. And that's when we first met, right, Shirish? When I started up the Governance, Risk, AML, Compliance and Ethics Foundation, there's an acronym, GRACE, right?
That's right.
We were a bunch of nerds back then that wanted to really improve the compliance community experience. And so we actually based GRACE, Grace, off I don't know if you guys remember Knight Rider, the Knight Foundation, and the KNIGHT stood for something. I can't remember what it was exactly, but we want to be cool like that, right? And we were focusing on video-based learning, which in 2013, what was out at the time for video-based learning was, or e-learning, right, was a bunch of PowerPoint slides that probably ran for about an hour with some guy just talking over. It was again, user experience wasn't that great, right? And so what we did was we tried to accommodate for the YouTube generation by making short 1 to 2 minute videos and one of my first hires was actually a TV producer, and we make sure that each of those videos was a different genre or style so that you just remember it better. And it would range from, you know, anything like an animated video to someone talking in person with objects popping up in the background, to we even went as far as doing like a 70s style Kung Fu movie style video, to even a Korean drama style video as well. And the idea is that if you want to remember placement layering and integration, the Kung Fu video taught you that, and you remember what the Kung Fu guy did and the moves and what he said, etc., etc. And then it's just a more positive, shall I say, learning experience than what was on the market at the time. I then, my company was then acquired by one of the law firms in Singapore. And then after overseeing that integration, I then helped launch the RegTech scene in Singapore with a company called Datarama, where we had a visualization. Again, we actually took this from Google Maps, right? Where we were able to expand the map, minimize it, but for UBO mapping. And it was really, really cool project to work on. And that was then that I was actually headhunted to join what was then Thomson Reuters, now Refinitiv or London Stock Exchange Group, to head up the strategy for Southeast Asia. I did this, and then I was there through the whole Refinitiv spin out. And then it was then that I started working very closely with Napier Technologies. I then left Refinitiv to help the US Department of Justice launch a public-private partnership that focuses on the fintech space called the Fintech Sector Public Dialogue. So we went to New York City. We what's it called? Launched it with the what's it called? The Federal Reserve in New York, in their building. And that still runs till today with the Honorable Karen Kenny. And then, so after I left Refinitiv, and then during this whole time with the DOJ, I was still in touch with Napier. And then finally they said, you know, do you actually want to come and launch Asia for us? And so 2.5 years ago, I did that, and that is where I am today. We started off with, well, I started the company and joined as being the only guy in APAC, and we had about 35 people in the company. And today we have about 210 people in the company and about 60 people in APAC. So yeah, that's my story. Sorry about it took so long, Shirish, but
that's fantastic. That's no, absolutely fantastic, Robin, and it was great to see the growth that you've had, as well as what you've managed to achieve for Napier in the last couple of years. So, Robin, you regularly interact with compliance leaders across Asia, right? Now, what would you say are the top few key issues that keep them awake at night? And also, what are some of the high-level industry trends that you're seeing?
Yeah, so look, there's a lot to unpack there. So I'll try and keep everything as pristine and as sharp as possible. I'll say that the first one would be the industry changes themselves, right? So whether that be the fintech revolution, the insurtech revolution, wealth tech, et cetera, et cetera. So there is definitely like a digitization of industries coming in, and it really depends on which compliance leader you are, right? If you're the compliance leader of a small startup, then what's keeping you up at night is are you going to get a license? Are you going to get established? Is the company going to be around in a year or two's time, right? Et cetera, et cetera. And then I guess if I look at it from a big company, big organization perspective, it's are we still relevant, or is the organization relevant enough to not have these little guys come away and eat away at us or threaten us? So that's the overall picture, first of all. And then as we narrow down, I would say that there are ever-changing regulations. And so compliance leaders, there's three things that they want to understand from that. that front. The why the regulation was done in the first place. So was it like an emergence of a new predicate crime, for example, in the fin crime space, or is it because something happened, or et cetera, et cetera? Why are we having this change in regulation? Number two is, what does this mean for me and my organization? Okay. And the third is, how are we going to accommodate for it? So, at Napier, for example, we offer transaction monitoring, and there might be a regulation. I remember there's one in Malaysia a while back that said that all cash transactions over 50,000 ringgit need to be monitored or logged. And then they brought that down to 25,000 ringgit. And so as far as Napier is concerned, if you were using Napier, you can actually change that in our rule builder, right? There and then, or if you're using an older system, you go back to the vendor and have them do that for you. But that's an operational slash training and whatever. How do you accommodate for that within your own organization? So the why, the what, and the how. I guess another thing that keeps everyone up at night is the role of compliance itself, and how it's almost evolved over the years, right? I've been in this game now for about 10 years, and I'm sure you've been in it for just as long, right? If not longer, right, Shirish? And we had this discussion the other day about how original compliance officers, well, at least 15 years ago, were salespeople that couldn't make their numbers and didn't want to do sales anymore, right? And then it went from that to lawyers who didn't want to do law anymore, to more of an operational, like, risk kind of role, to the technologist, right? And if I was to take that latest one, what skill sets do you need for that? We see a lot of big data courses taking off, and AI courses and what have you. I had a panel, and this is like 4 years ago now, where one of the panels I was moderating, the head of compliance said that in 20 years time, the person that has my job will have to have a PhD in data science, right? So I guess that skill set and do I have the right people and mindset within my team is another one. If the company is large enough, a lot of heads of compliance have to deal with internal politics, right? Is this, some companies are so big, they have like almost Game of Thrones level politics happening, right? And unfortunately, the head of compliance is caught up in that, or has to navigate through that. And this comes with the territory, right? The bigger an organization you're in, the more politics that are going to be, and managing that is definitely a challenge. Especially if not everyone has your interests or your organization's interests at heart. And then I think the last one, and this is more for a particular set of compliance officers. A lot of compliance officers are in the role because they really do believe in what they're doing. And so if I was to take the financial crime element, for example, a lot of compliance officers who manage financial crime really do care about the predicate crimes, whether that's human trafficking, wildlife trafficking, environmental crime, et cetera, et cetera. They really do care about that, and that is something that they and I'm definitely aligned with these guys and feel this way myself. Definitely feel that they could make the world a better place, per se, or make their organization a better place at the very least, with that mindset.
What are some of the industry trends you're seeing? But what we could do, Robin, is towards the end, I'm also going to ask you a bit about what we see going forward, and maybe you could speak a bit about the industry trends that time.
Sure.
But you mentioned regulators, and we see a lot of stress by regulators on reporting entities or regulated entities. to ensure good quality of reporting, right? It's not just about quantity anymore. Now, obviously, this is not going to be possible without the use of technology. So,
Right.
where in the entire supply chain of transactions do you see technology adding value so as to help these regulated entities to comply better?
Yeah. So when you first when we first discussed about actually doing this and we discussed this as a question, Shirish, I had a long hard think about this, and it's almost as if you're looking at the whole AML suite in a way through that transaction. And I kind of, so if I was to compartmentalize this, I would say that you have pre-transactions during the actual transactions themselves and post-transactions, right? And so when you look at pre-transactions, it could be anything from your regular KYC, KYB solutions, ensuring that they are you're leveraging technology for that. And there's different levels of the full technology stack, by the way, right? So what I'll do is I'll say with KYC, we talk about eKYC. There are a lot of players in this market. Okay, the barrier to entry to doing eKYC is actually very, very low. Okay, I mean, even the cloud vendors offer the tools for this. So you and I could technically raise $5,000, go to a solutions architect in, I don't know, Alibaba, give them money, and then the guy will just pull the tools off the shelf and say, here you go, you're in the market and competing, right? It's a very, very low barrier to entry, and there are lots of considerations that you need to take into account when using these systems. For example, there's one company I'm aware of that's using a mainland Chinese company for facial recognition, an Eastern European company for document extraction, right? A Nepalese company for so you know what I mean, and these are all servers sitting in those jurisdictions that are being leveraged, right, to other organizations which have everything in place. The data is not going to leave the country, etc., etc. So there's that KYC factor, there's the KYB factor, and there's no silver bullet to this, right? Until everyone, like every jurisdiction, sets up a UBO register of some sort, and everything is interconnected, you're gonna have a very hard time, right? I mean, forget the UBO register. Some of them aren't even digitized, right? So there are countries in Southeast Asia where they don't even have a centralized company registry. You got to go to go to and manually retrieve the records from the province, not even not even like the capital, the province, manually retrieve those company records just to make any sense of how they're structured, right? So there's that KYB element and your overall fraud element that rolls into that. There's also what we call payment screening or transaction screening, where you can stop incoming or outgoing transactions based off, whether there's sanctioned entities, sanctioned jurisdictions involved, et cetera, et cetera. So that's kind of how I would summarize the pre transaction element, right? During the actual transaction, you want as much details as possible, okay? And so that's more of a data collection and ensuring that there's enough data around that, and I'll talk more to that in a bit. And then last but by no least, is your post-transaction technology element, whether that's transaction monitoring or the filing of STRs to ensure that that's automated, okay? So that's the breakdown of the actual transaction itself. I would say that if you really wanted to go above and beyond, which is what many banks are doing as well, you bring it all together. And so what I mean by that is this concept of holistic AML, whereby you rather than just taking the actual transaction, you take all the other data and make that transaction data a piece of the puzzle and have that whole profile on Shirish, for example. And so by doing that, you're almost taking like I guess like a Facebook approach, right? So like how Facebook knows who you like, who you hang out with, who you where you hang out, et cetera, because you're there logging all of that. You can have a similar approach to AML, where we have all of Shiresh's data from an AML perspective and have that profile on him, and then we're able to spot anything that's out of the ordinary or unusual behaviors, et cetera, and then flag those accordingly. Does that make sense?
Yeah, that does. Yeah. So thanks for sort of breaking down into those three sections. I think that was very useful. And Robin, you mentioned while answering the previous question that obviously when you look at compliance officers, your sort of compliance officers of regulated entities of all sizes. It could be like a small fintech, a small bank, or a large institution. Now, many times what happens is the lack of scale or size or transaction volume is often cited as a reason for not adopting AML technology solutions. You mentioned that in certain jurisdictions, they're fairly, I would say, behind in technology. So how can smaller banks or smaller institutions or startups overcome this automation hurdle?
Sure. So the first thing I would speak to on that is mindset. Okay. Many, and this is a big reason and a big thing that we've discussed at the DOJ FSPD, right? So I can't speak to small banks as much from this perspective, but I can definitely speak to fintechs, whereby it's actually not too dissimilar to how people thought of compliance when I was starting out, or probably when you were starting out, Shirish, right? It's a pain, business prevention, cost center, et cetera, et cetera. But what I find especially prevalent on the fintech side is we see many founders, right? Not even the compliance officers, but founders take that view, but also have the view that they can cut corners as well, right? They would look to people like Facebook, Mark Zuckerberg, where he says, move fast and break things, right? So it's like, let's move fast and break compliance or break AML. And it's like, no, you can't do that. This is financial services, right? You by operating as a fintech or a small bank, right? You are a gateway to the financial system, right? And if you want to be a player in the financial system, you need to understand that we need to keep the bad players out, right? And not bad players, sorry, bad actors out, bad people out, right? And so I think that mindset would be number one. Number two would be knowledge, right? Look, and this isn't, I'm not paid to do this, but signing up to Fintelekt and watching a video, Fintelekt offers like the Netflix for compliance training in a way, right? With your videos, right? So and it's not super expensive either. So I would put, if I had a 10-person fintech and I was looking to launch, I'll put everyone on Fintelekt and say everybody this week we watch this video, next week we watch this video, et cetera, so everyone's in that mindset and has the training for that AML angle. And then look, when we look at the technology itself, how do you view AML automation, right? If you actually sit back and do a cost benefit analysis, right? Is it going to be cheaper for me to have an eKYC system that costs, I don't know, $100,000, or am I going to hire 5 people to go through documents and what have you, and pay them $50,000 each, right? When you actually do the numbers, the cost benefit analysis, technology actually comes in and can help you save a lot of money. And I guess last but by no means least, for for solutions like Napier, right? The way I would describe us is that we are the iOS for financial crime, where we have a platform, we have different apps that sit on our platform, all the apps talk to each other, integrate, etc. You don't have to buy all the apps at once, right? Just get the ones that you need, right? It's pretty cost effective if you do that, and then later you can start adding apps later down the line and have everything within that that system if cost really is a factor.
Sure. That sounds good, Robin. And anyway, thanks for the plug into Fintelekt, by the way.
No problem. No problem. Slip me 20 later. I'm just kidding.
Yeah. So, Robin, obviously you work with customers in many countries, and you've probably noticed that some customers have a better AML compliance, that is more effective than some other institution, right? Some of them have a better mousetrap internally. Now, what factor or factors would you attribute this to?
Sure. So there's it's the jurisdiction itself, and what are the regulations. If we take it back to first principle, already mentioned, right? Some jurisdictions have way more regulations than others, for better or for worse. And so the less regulations you have, the less of a solid compliance program you need, especially if you only operate in that particular jurisdiction, right? The second, I would say, ties into the previous question, where it's really down to the approach of the organization themselves and how seriously they take AML. I'd say another would be, how much money do you have, right? How well funded is your organization? I mean, there's a reason why, as fintechs get bigger and bigger and bigger, and scale up more and come into more money, that they're poaching compliance officers from banks, right? I'm not saying that a banking compliance officer is better than a fintech compliance officer, but because they got a lot more to deal with, and the perception is that you have more substance here versus this, right? So how much money do you have, right? Because that will affect the quality of the team that you bring in. I would say that there's what comes with the compliance program is the understanding of technology and the quality of the technology team as well, right? If your technology team is lacking, then and you aren't able to do what you got to do, right? You might have to make some changes to the policy accordingly. It should not have to be done that way. You should write the policy first, and then everything else should line into that. But hey, sometimes you run into situations where you can't, right? And then last but by no means least is another plug for Fintelekt here, but overall education, right? Some teams are definitely more educated than others, and in fact, if I can go back to the fintech versus banking example, right? I mean, this definitely isn't the case now, but I remember when the fintech scene launched, circa 2014, 2015, the head of compliance would be a university grad straight out of uni, right? And so you compare someone like that to someone who has 20 years banking experience. That's what I'm talking about. Yeah.
Right. Yes, makes sense, Robin. So, we usually these days can't do any episode without talking about the pandemic. So, you've noticed that the pandemic has actually accelerated certain financial crime trends, especially in the area of new payment systems and digital banking and virtual assets. Now, can you share your thoughts on how regulated entities can or should be better prepared to identify and deal with these risks?
So first and foremost, education and knowledge. Understand the products, understand the industry. So if you're a bank and you're setting up a digital asset custodial service within your bank, then you really better understand this thing to death, right? so I would say that so once you understand the arena that you're entering or dealing with, etc. Next step is having the skill set and experience to write the policy to that. Okay, so you then come up with the appropriate policy, and then you bring in the technology, which is where we come into play, right? And then from the technology perspective, it's understanding what functionalities are available or are not available, picking the right vendor. A big one for me is this concept of holistic AML that I talked to earlier, where someone like Napier could integrate, all the various crypto equivalents, right? That whether it be KYT, whether it be what's it called, like the investigative tools, etc., into our system, adding it to our data set, and then being able to report on that or integrate that into your risk assessment, accordingly. And then I would say the last one, and kind of ties into what I mentioned earlier, is the recognition of skill sets, especially, right? A fraud officer is actually very different to an AML officer, right, in terms of what's required. But unfortunately, many of the new school fintechs or whatever put all financial crime in the same bucket and think that one could do the other, but it's actually very, very different, right? And so the systems that come with that are very different as well, right?
Yes. So, in closing, Robin, going back to one of the points that we were speaking about earlier, I mean, what would you say are some of the industry trends? What would you say is the outlook for 2023, especially when it comes to AML technology deployment?
Yeah. So look, I think that before we even begin with AML technology, if you just look at the overall landscape of what's going on in the economy right now, right? Interest rates going up, okay. Inflation is going up, okay. We're probably going to head to a recession, a global recession again. And so what comes with that is we're going to see a lot less fintechs, a lot less startups, right? The startup sector will definitely be affected. I mean, we've essentially done what, like 10, 15 years of 0% interest rates, right? So now that we're coming out of that and everything's suddenly going up, we're going to see less startups as a result of that, and so current startups will be affected, quite dramatically as a result, right? Everyone will be affected by it, right? I mean, those of us who have mortgages, for example, our monthly payments are gonna start going up. I guess, but I don't know if it'll hit 80, the point in the 80s where interest rates were 20% and it was actually worth putting your money in a savings account as opposed to investing in anything speculative, right? But it looks like it's heading there right now. And so what that means for AML, so let's talk about the predicate crimes. First of all, criminals will take advantage of this and adapt. They always have, right? They adapted during the pandemic and they'll adapt to this. Okay. I think those fintechs that are able to make it or have a chance of making it, some guys will definitely, start cutting corners, right? It's survival mode as opposed to what it was before. One thing that is interesting though about this time, so that will happen, but I think the other aspect to consider here is that this is when, during the go-go years when everyone is perceivedly doing well, this is times like this is when we see, as Warren Buffett likes to say, who's swimming naked, right? And when the tide comes in, and so we will definitely see more blow-ups, right? We've already seen FTX, right? When crypto goes down, this thing blows up, but I think we'll see more blow-ups of that nature. And then it's not necessarily just restricted to the crypto space, right? And so as a result of those blow-ups, that's when regulation tends to to adjust accordingly, and so yours and my customers will be affected as a result of that. And then if I was to talk about the AML deployment angle, I would say that this is a great time where the newer, cheaper technologies can really, or more effective technologies, not necessarily cheaper, but more effective technologies can come into play. So for example, with Napier, we are architected with Kubernetes, right? Which means that we could be deployed on-prem, on cloud as a managed service. You can copy and you paste your software all around, and it doesn't matter as far as the end user is concerned. They won't see any change, right? Because we use containerization within that. We will see holistic AML really come in and have that full client 360 reviews, perpetual KYC, AI insights, all that stuff really continue to grow, because at a time when there's less money available, you kind of have to look to the technology side, right, to see if automation can help you play a part.
Right.
Yeah, I think that's it off the top of my head.
Yeah, that's great, Robin. And on that note, thank you so much for joining in today, sharing your thoughts.
Having you, Shirish. I mean, like I said, we've known each other for a while now, right? And we haven't done one before, so this
absolutely
that we get to catch up here.
Yes, and hopefully I'll see you in Singapore soon. And until then, take care.
Sounds good. Thank you, sir. Goodbye, and thank you everyone for watching.